All right, guys. So I was talking about this on the private, not really private, on the Discord, and I was trying to explain something to you guys that you should. These are just for people that want to, um, because like me personally, I just I just like to go as deep as possible as I can and just learn more, discover more things. So this is not something that I invented or no, I'm just noticing some things from what I've been backtesting and also learning from the inner cycle trader. So we have that's ICT. So this is that 9:30 open. We have the opening range gap. Over here we have the 9:47 fair value gap, and this white shaded area here is the 15-minute chart. Then that's that 9 p.m. low. My network is very bad, so you guys will have to bear with me. But over here, anyways, this low here is from Monday, Monday 31st of March 2025. That's that level 19283. Most of you that are using NAS 100, you won't see it at the same price action. But that low, this line here is for that low at 9 p.m. on Monday, which was yesterday, 31st of March. That's the sell side liquidity we got from that 15-minute time frame. If you go to the 15-minute time frame, you see it clearer. So I was saying you should do something like this on your chart. 45, 50, 55, 00, 05. Semi or column. So once you have that, now our model is what? Our model is the our model, or when we expect our model to start, is at 9:50, which is that 9 macro, 9:50 to 10:10 macro, and we have the time being 9 o'clock, and at 9:50, this 9, 9, 9, 9, no, that should be 10, 10, and 10. Let's make it a bit bolder. So this high, this was the high. You can see this high on that voice note I sent. I was saying something about 617 being higher than 620. So you see, we have inside this, because I always say that with before um a sell side is going to be taken, before price runs for a sell side, there have to be a run on buy side liquidity. That if you're expecting price to go down for a sell side objective at a particular time, because at this 9:30, these are the only available liquidity pool. These are the only smooth edges. So it's smooth edges. This is a very high probability buy side liquidity. And we had what? At 9:55, at 9:33, we are not trying to trade. We are only looking for high probability setup at a particular time, which is that macro, when we expect that the algorithm will begin to act and start following the script. What is a macro? A macro is set of instructions given to an algorithm to perform a specific task. And in this algorithm, which is this all these candles, these candles, this chart, the tax it creates or the tax it runs for is what? Liquidity. That's what it does. Liquidity is that's the only food. That's the it's just like your wristwatch is only able to show you time. Yeah, I know we have okay, let's say your remote, your DSTV remote or satellite remote is only meant to give instruction to your TV or your decoder. Can you use a remote and shave? Can you use your remote and cook, turn soup or whatever? No. This is only meant to what? Hunt liquidity. So when it's now that 9:30, your eyes should be looking for, okay, where are the nearest liquidity pool? Where is the nearest close by liquidity pool that I can see? And that's the low there. This low, we have this low. All these are sell-side liquidity. We have this low close to this. And if you look here, this is a low. This is a low. So if it comes for this low, definitely you should want to go further because there is more liquidity below here. And it's at a time when the algorithm is doing what? Hunting liquidity. So if I expect to see price start performing what I'm used to seeing it perform, start obeying these PDRs, I want to start seeing something that I can use. That's from 9 inside 9:45. from 9, 46, 47, 48, 49, and 50. I want to see something that I can use or would make sense to me. It's either use or make sense. Use or make sense. If it the next batch of time, the next 5 minute batch come, I can't see anything that I can use or make or sorry, it has to make sense first. If I can't see something that makes sense, I'll wait for the next batch of that 5 minutes. Uh, network. I'm not sorry about my network. You guys should be telling me sorry about it instead. Because taking my time to do this. So we have in that first batch of time, which is from 9:45, 46, 47, 48, 49. What do we have? We have the first presentation fair value that forming at that time. So now what are we seeing? We are seeing signs. We are seeing something that our eye should catch. It needs to be something that you can make sense of before you can use. So it has to form inside either from 45, 46, 40. If it doesn't form inside that time, I'll wait to look at 9:50 to 9:51, 9:52, 9:53 and see. If it doesn't, I'll wait for this. If it's still not making any sense until all this time, then I'm not interested anymore because this is my this is what I'm looking at. This is what I'm trying to focus on. We have this first presentation for ever lookup, and now if we are now coming to look at it in pure analysis form, we have these relative equal highs, these smooth highs here. So we traded up at 9:53, failed to get into this 15-minute CB where we want to see price start rejecting from because of that displacement. Look at that 15-minute chart. Look at that high. This is the previous, yes, this is the previous day's high. This is a previous day's high. This is a high forming what? Close to that previous day's high. So that is what also, that's a smooth edge. Just the same, just the way this smooth edge is here. That's the same thing. Let me clone this. That's the same thing. They are very close. So price rallies up, purges that liquidity, then does what? Breaks it down lower. Where's the nearest swing low? Over here. Is there any swing low here? No. Any swing low here? No. Any? Sorry, let me. How do I get this? I'm trying to get this crosshair out of my chat. Okay, now. So Sorry, I had to like pause the recording for a moment because my apologies if you guys hear some children um making noise. We have like the neighbors' children just shouting and playing outside. So if that gets into this, I'm sorry, there is just no way I can avoid it because it's also annoying me too. So that smooth edge here, we have that run on buy side liquidity. This red area is a daily CB. It's on the daily chart. Go back to the daily chart, you see it for so this candle here, that's the daily CB. So now we cleared buy side liquidity and what we are trading inside that um, daily BC. Then we have a shift in market structure. This there is no down close candle here. No, there is no swing low here. No swing low here. No swing low. 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 Where is it? It's over here. This is your swing low. A swing low is when the candle at the left is higher than the candle in the middle. Sorry, a swing low is when the candle at the left, this is the left, is higher than the low of the candle in the middle, and the one at the right is also higher than the one. So these three of them, the lowest one, this is swing low. Market runs above buy side, breaks down, that's your market structure shift. On the 15-minute time frame, then we have what? We have all these lows here. This price action, some of you, if you guys notice some of these retail traders, they will draw something on their chart like this. They will draw something on their chart like this. This is what they teach you guys in the book or in those PDFs you align yourself about. This is what they teach. So this is what they when they will draw this something like they don't be like support, support, support. Price is using this, price is using this support. This is what these are all support levels. When I see things like this, price going up, forming or giving those retail traders a chance because there are a lot of go over on Twitter and look, and even YouTube, go, you don't need to look much or go look around so much for it. You see them draw a line like this, draw a line like this, and they'll say, this is a support level, this is a resistance level, and blah blah. They just say all manner of things about it. And you see, if you buy any forex book, you see it. When I see that, all I'm seeing are victims. This is a victim. The person putting his stop loss is a victim. This is my victim. This is my victim. This is my victim. This is my victim. Where they are looking at as a safe haven. Oh, if it breaks below here, it has failed. It cannot because this is finding support here. It cannot break below this level. They believe that this line is a wall they have put in price for it not to break through. And it look nice? Don't you like how in your eyes you see how it's forming inside? So when I see this, all these are victims to me, and price takes this level out. This is now when they'll be like, it's about to break out, it's about to explode higher. What's the market doing? It's just running on buy side liquidity here. Market structure shift. So all those people that were have been struggling, buying, because they think it's going bullish here. The market is doing what? Making them pay with pain, killing their hopes, killing their dreams, their $1 million dreams, snatching it away from them painfully. This is where their liquidity will be stop loss. Oh, it's been going up. It's never going to come and take out this flow because this line that I've drawn here is a magical line, and price is just going to keep using it like a ladder and keep going up. Uh, yes, that's how they think. Price is going to and no, just not to throw shades at them, but I used to think that too. I used to think that too. There are some that will buy, and as it touches this line like this, they will buy, and they'll think the market is going up because the market, this high that was created, this candle was once bullish. So as it touches this, market runs up. Most of them will have their stop loss here because you can never, you can't violate this line. They believe in it so much. There's your belief and hope crushed. That's how you should look at this because this is the garbage they teach everybody. And you don't have to feel bad about it that, oh, you are hurting anybody or whatever because everybody signed the same week's agreement, eat or be eaten. So there's no feeling Christian, there's no you're looking at all these as your victims. Market structure shifts, 15-minute gap, market trades into it, stops where at the consequent encroachment of the 15-minute gap, then runs lower. So let's go down to that 1 minute, then I'll go into more details about that time secret I was talking about. It's not something I know how to use or I'm professional with, but it's something that I've been observing. It's something that I have been observing, and I feel like when it's just like I just feel like, oh, I've 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 stumbled onto something that kind of makes sense, and even when I backtest, I see it too. So This idea may also be something that the algorithm is really using. So it's not a win-win, it's not a secret formula or what have you. So inside that um 45, 46, 47, 48, 49, 50, we have that first presentation for Evaluate forming inside it. Market rallies up, stops at what? That 15 minutes consequent encroachment. Then trades down. It trades at 9:50 to that place. So we are looking for what? We are looking for, since this level, this buy side liquidity has been purged, and we are looking for this gap here now to be used as an inversion fair value gap, not bullishly, because that's a trap. If you don't know what has gone or what has happened here from what I was explaining from this 15 minutes time frame, because that was where the shift in market structure was, and this is the fair value gap where we expect price to trade into before running lower for this sell side liquidity. So if you don't know what I've explained, go back and listen again, because now we're expecting what? Bearish price action, and we don't have a swing low that was formed. This is where the swing low is, but this isn't that regular easy one that you can just easily, that model 2022, go and watch model 2022 ICT. This is a bit different. So from 950, 951, 952, 953, 954, 955, we want to see this fail. What happens here? 952. What do we have here? Failing, then creating what? A bearish order block. Down close candle, up close candle, down close candle, down close candle, down close candle. We have series of down close candle with only this up close. This is that Judas. So it's giving us that sign. It's giving at that moment, at that 9:53, you already have a sign that as this has been created like this, and we expect that price should, yeah, some of you may start taking your trade from here at 9:55, which is also fine, but your stop loss has to be above the high of this other block here. So since I've seen this, I'm not expecting that from 9:55 to 9 to 10 o'clock. That's 9:55, 9:52, 9:55, 9:56, 9:57, 9:58, 9:59, 10 o'clock. This should be traded into and be used as a bearish order block. What other reason do we have there? Price broke below this fair value gap and left it. It traded, failed, left it, then came back to use what? The consequent encroachment. Look at where price is stopping. At what time? 9:59, 9:50, 10 o'clock. Market drops down, comes back to what? The consequent encroachment. So we have that 10 o'clock. What's the next? So sorry. We have that 10 o'clock, which is now the next batch of algorithmic delivery. So we're looking for something from 10, 10 1, 10 2, 10 3, 10 4, 10 5, 10 2, 10 3, the CE of this. So we start to expect a reject. We want to see a rejection there before what? 10 6, 10 5, 10 6. We have another displacement here. So because we have this displacement here, we want to now see from 10 10, because this is inside 10 5, 10 6, 10 7. 10 6, we have this already. We have this fair value gap here. And it's where forming where that midnight opening price is. And if you investigate more, this is where the new week opening gap level is. It's also somewhere around here. Let me show you. Mm. So this is still the same chart, but I don't have annotations here. This is that price action where that midnight opening price is. And look at where the new week opening gap is. Let's go back to that um, chart. So that was inside that um, price action of 959596978, right? So from 910, sorry, 1010, what are we doing? We're trading into that um, fair value gap. Yes, we did. Yes, you can take it from here. Then you have to wait for price to, at least from this time, we should start rejecting lower since it has done the work of doing this. So once it's coming here, I'm not scared. I'm not feeling, because everything is aligning properly. So it comes here, drops down, taking out all these. These are also sell side liquidity. So all these people here, remember this that I drew, that they are doing, that they are buying from here, doing all this support and resistance. I'm ambushing them here where that stop loss that you are putting is money. That stop loss you put every time you put on a trade. Sometimes imagine because there are hundreds of thousands, if not millions of thousands of people, millions of people trading this market. So imagine those millions of people now putting a stop loss of, maybe here you have like 500,000 people putting a $500 stop loss here. You have 80,000 people putting $1,000 stop loss here. Imagine some that put here, some that put here, some that put here. So imagine how many trillions of dollars altogether that will be put there. That's where the algorithm is going to hunt them. Those secret smart money traders that nobody knows. That's how they are taking your money. They teach you that garbage, then run against you like this. This is how you attack what they teach. So we broke down to take out all this sell side liquidity here. Was this 10.22? So we expect from 10.25, 10.28. Market rallies 10.29, 10.33. Market rallies up to take out buy side liquidity. Then kept going up. So you guys saw me, I took my trade from this candle here. Then rode it down to this candle because it came close, reject, came close, reject, went up, and I was going with a position where I couldn't take partial. If I was taking a partial, it means I'm closing the whole trade because I couldn't partial out. Had it been, I went in and I've already like partial out. I've taken half of my position off. Then I would have been more comfortable to let it just take this. But it kept flirting with where my TP is, and I just couldn't take it, and I just took my um, profit. And as soon as I took that profit, it just ran down to take out this sell side liquidity, and all it was doing was, or what I would have done was to wait for price to at least start forming candles above this consequent encroachment, this long wick here. Because if it starts going above it, then we begin to have that much more stressful run on stops. So I hope you guys found this one insightful. If you like want to go, that's if you want to, if you are very, 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 very um how like if you are just obsessive of learning, trying to build your skill more, I feel like this is something you should also pay attention to as well. You should also try to look back at as well. And that was the whole business of yes today. So if this kind of made some sense to you, or you picked a thing or two, just give this video a like, If there are things that you didn't really understand, let me know on the comment section. And until I be with you again.